Yes, people, a very, very happy evening to all of you. Thank you so much. So, guys, we're doing this chapter called as Fundamentals of Partnership. So, last class, we had a discussion on the provisions of Indian Partnership Act 1932 in the absence of partnership deed or in the absence of a particular clause in the partnership deed. I'm not doing a recap of this because in future, at various occasions, these points will be repeated. So at that point of time, I'll take care of the revisions. Then we discussed what are the liabilities of partners. Followed by that, we did illustration 1 and illustration 2. Today, I have to discuss with you what is the meaning of charge against profit and appropriation of profit. If I take this topic right now here, it will look very random. So I thought I'll set a base for this topic. At the same time, I'm getting an opportunity with all of you to do a quick recap of 11th concepts. Not all the concepts. This one small concept that I want to discuss, and that will be a continuation of this particular point, and it will be a continuation for the upcoming classes. So my question goes to all of you. Are you all aware what is the accounting process? In 11th, I've discussed this n number of times, not one time, not two times, not 10 times, hundreds of times this point has been discussed. Multiple chapters. So those who did 11th with me, by now you're a pro. You are pro. But still I'm discussing this because we have so many other people who have joined us for the very first time. And I'm 100% sure, they have no idea about this accounting process. So I thought I'll do a quick recap of this. With this, I'll make you understand how much important for you is 11th classes. I'm telling you guys, there are certain chapters of 11th standard which has got a direct carry forward impact in your 12th standard. If those topics are not strong, you're not screwed. You are royally screwed. Which are those chapters, sir? Rules of debit credit. In that, there are two rules, golden rule and modern rule. I wanted to be a pro in modern rule. Throughout your 12th standard, and especially in volume 1 and volume 2, it is full of journal and ledger. Without modern rule, you will not be in position to do the entries. So rules of debit credit chapter of 11th standard is very, very important for me. After that, journal chapter. In the journal chapter, I've taught you both golden rule and modern rule, using which how the journal entry has to be cracked. Lot of people in 11th, they tend to by heart the entries. By hearting entry will not be sufficient. You need to apply the golden rule or modern rule. So second chapter that you have to become a pro in 11th is journal, followed by that ledger, then depreciation. Trial balance also okay, not much important in 12th. Depreciation is super duper important because in partnership topic and in your cash flow statement. In partnership topic, depreciation is a little bit easy only. Still you can manage. Anna, cash flow statement, the last chapter of your 12th standard, you cannot survive without depreciation topic. Especially, we have something called as provision for depreciation method, which a lot of people quit or omit in 11th standard. You will be in trouble with that. Second, how to prepare machinery account, provision for depreciation account. All that is very, very important. Next chapter that is important is final accounts and adjustment of final accounts. You have a glimpse of that coming in your partnership itself. In partnership, you have so many adjustments to do. Maybe from today's session or from tomorrow's session, we'll start applying the final adjustment ka topic. So if you're not clear with that, you will have a difficulty time in this 12th standard. Now some people might have a question that, sir, we have not studied 11th properly. What do we do? Only one choice is you have to do my 11th standard classes. Last year, every year, at least I have 15 plus people coming and telling me that, sir, my 11th ka base is very weak. We have not done it properly. They come and openly admit it. And I give them the recorded classes of 11th standard, which they have to complete by May end, because April and May, only 2 months are there in hand where you can bounce back. Once you touch June, you get time to breathe, eat, sleep. You are lucky. In that period, if you say, no, now basics is not strong, I have to do 11th recording, I will give. You will not have the time to watch the recordings. But April and May is a period, it's a little bit lean period. If your basics are not strong, you can watch it and make it more stronger. Am I loud and clear? So those who are weak in 11th standard, not so strong, be honest to yourself. If you're struggling, come to us, let us know what is your problem, and we'll give you solution. And those who have done already 11th with me, again, for you, no need to do classes, but these chapters, what I said, you have to work out the questions from T.S. Graval book. At least do a revision or glancing of it so that your journey in 12th is going to become comfortable. So whether you've done with me 11th or not, for both the set of people, doing 11th ka T.S. Graval book one more time of these chapters are very, very important. After class today, in the WhatsApp group, I'll list out the chapter names from 11th standard, which has got the connectivity in the 12th standard. I'll list out the names. From today onwards, start working towards it. Am I loud and clear? Fantastic. So can those people tell me what is the accounting process that you've studied in 11th standard? Those who have not done with me classes in 11th, can you tell me what did you learn about accounting process? What is accounting process? You've done 11th with me, my dear. So you have by hearted everything. So I know what it is. I want other people to answer. What is accounting process? Nobody? Right? No, attempt no. Okay, those who have done 11th with me, you tell me. Wait. Now, this is the clear difference. Those who have done classes with me, those who have not done classes with me, you can see the difference in confidence. Same thing will happen in 12th with your friends. Those who are thinking, no, I can manage 12th without any tuition, without any support. This is the difference that is going to happen. Just wait, June month, July month, August month. You'll see what is going to happen. If your friends don't have to land up into that trouble of realizing that, no, now I need tuition. It is better that they join right from now. Because if people come to me in month of June, July, August, I will give admissions. By the time, imagine how many chapters will get over. Correct? So this is the differentiation I wanted to show to all of you. Anyways, continue. What is accounting process? You're feeling cold. Accountant, tell now. Chorus me you tell. அப்படி பாதி கடிச்சிட்டீங்க. Okay, I'll do the needful, but I'm happy that you have attempted it. Guys, accounting is a systematic process. It is not a random process that, I can do whatever I feel like doing. Boss, we have a system in place. This system has been created by the accounting bodies across the world. They've come out with a proper system, and that system they've given it to us for us to follow in our day-to-day routine. So accounting is a what process? Systematic process of what? Identifying a business financial transaction, or a business financial event. There's something called as transaction. There's something called as event. What is the meaning of transaction? Transaction means exchange or transfer of what? Goods, service, or money. Now, I'm giving my knowledge to you. So this is transfer of service, transfer of knowledge. So what is happening between us is a transaction. Yes or no? Because in return, what are you paying me? Fees, money, right? So an exchange of goods for money, exchange of service for money, or exchange of funds. All the three belongs to transaction. Example for goods. If I buy and sell laptop, buying laptop, selling laptop involves exchange of goods. It is a transaction. I'm giving coaching, or you're taking service from AC, repair person. He's coming and doing the repair of AC. That is also a transaction, because for that you're paying money. Example for funds transfer. Cash deposited in bank. In that, are you giving any goods or service? No, you're depositing your money in the bank. So what is happening? Exchange of funds. All these three are termed as transaction. क्या problem तुम दोनों को? तुम हंस क्यों रहे हो? बोलोगे तो मैं भी हंसूंगा ना. I'm tempted to laugh, but I don't know why they're laughing. So even I don't know what to laugh for. To tell joke, then everybody will laugh. No? See, so much of stress in life. Somebody to crack jokes so that all of us can enjoy in life. No problem. No joke. चुम्मा है ऐसे रहते हैं. उसको एक टर्म बोलते हैं. जो बिना रीजन का हंसता है ना, उसको एक टर्म बोलते हैं. Now. So what is transaction? Exchange of goods or service or funds. between two party. Between two party. In that one party is business. Another person is third party. Another person is third party. Because I cannot do transaction with my own self. I need a third party with whom I can do the transaction. An activity which involves transfer of money or money's worth from one person to another person. In that one person is business, another person is third party. This is a revision. In the regular class, I took a lot of time to explain this. It's a revision of 11th. I'm doing a very fast recap. So try to capture with my flow. Now, what is the first step of accounting? Accounting is a systematic process of identifying a business financial transaction. For me to do accounting, first of all, I have to identify. I have to learn to identify a transaction. Only if I know this is a transaction, then I can do the accounting. What is debit? What is credit? If I don't even know what is a transaction, then how will I identify? How will I account it? So it is very important to learn how to identify a transaction. So meaning of transaction is clear? Okay. What is the meaning of event? What is the meaning of event? The results are very good. The result of the transaction is called as event. The result of the transaction is called as event. Consequences of transaction is called as event. Can you give examples? Very good. Brilliant. Profit. Very good. Profit from one account to another account. Wonderful. Tell me one thing. I buy goods. I sell goods. What is this called as? Transaction. 100 chocolates I purchased. 80 sold. Remaining unsold is how much? 20 is unsold. Now that 20 at the end of the year, you have to record in form of closing stock. What is the journal entry for closing stock? You tell me one method. Tell me any one method of closing stock, which is the famous method of closing stock. What is that one famous entry that we record for capturing closing stock in the books of accounts? Closing stock account debit to trading account, trading account, trading account, closing stock to trading account. Now you passed an entry, no? Closing stock to trading, you passed the entry, no? Is this a transaction? And the closing stock transaction, are you trying to encounter with any third party? No. The transaction with the buyer and the seller is a transaction. The dealing that you did with the buyer and seller is transaction. But the closing stock entry that you're recording is not because of transaction. Purchase entry is a result of transaction. Sale entry is a result of transaction. But closing stock entry is not a result of transaction. It is an event, which is an outcome of two transactions, which is buy transaction and sale transaction. When buy transaction, sale transaction, I net off. The remaining value I get is called as closing stock, and that is called as event. That is called as event. So when you record an entry, you have to bifurcate that, which are all transactions, which are all events. Got it? Not got it? So what is accounting? Accounting is a systematic process of identifying a business financial transaction and event. Transaction means exchange of goods, services, funds between two parties, in which one party is the business and the other person is the third party. What is event? The result or the consequences of the transaction, which has to be captured in the books of accounts, that is called as event. Both this transaction and event should be financial in nature. Means what? There should be monetary value attached to it. There could be certain transactions which are non-financial in nature. For example, tomorrow one staff is coming for interview. I took the interview. I liked the candidate. Immediately I gave an appointment letter. Please join. Isn't it a transaction? It is a transaction. Because in that, what is happening? There's a contract that is being exchanged. There's a contract that is being exchanged. Right? So it is a transaction. But can I capture that in my books of accounts? What entry will I pass? What should I debit and what should I credit? What amount? So in business, there are so many transactions which are non-financial in nature. Non-financial in nature. So therefore, I cannot capture all the transaction. So in the transaction, I have to identify which and all are financial transaction, which has got paisa, money value attached to it. Then such financial transaction or financial event should happen in the course of business. I went to movie theater. I purchased ticket. Is it a transaction? Yes, because it's a transaction between me and the theater owner. It's a transaction. Does it involve finance, money? Yes. Is it happening in the course of business? No, it's happening in the course of personal life. Can I record personal financial transaction in books of accounts? No. So I need to segregate all the transactions between business and non-business, business and personal. So first step is identify which is a business financial transaction or a business financial event. Only then the next step can be applied. So if this is clear, can I go to next step? Okay. Next step is once you identify a business financial transaction or a business financial event, you have to now measure in terms of money. Two things you have to take care. One, there should be a monetary value attached to it. That is there because this point we have checked means monetary value is also being checked. Second, the unit of measurement should be same. The unit of measurement should be same. Sir, can you give an example? I'll give. I purchased raw materials from India worth 10,000 rupees. Any problem? This is called as purchase of raw material. This is called as purchase of raw material. I want all the online students to keep your video switched on throughout the session. If anybody is not switching on the video, I will put them in waiting room. I'm telling I've purchased rupees 10,000 worth of raw material from India by paying 10,000 rupees in INR. Okay. Apart from that, I also purchased one more raw material from USA by paying $1,000. By paying $1,000. $1,000. So can I say my total purchases of raw material is 11,000? Yes or no? No. Why? The unit of measurement are not same. This unit of measurement is rupees INR and this unit of measurement is dollars. Two different unit of measurement cannot be combined, added together. Liter and kg cannot be added. Liter and kg cannot be added. Kg can be added with kg only. Got it? Not got it. So what am I supposed to do? I need to convert this dollars into INR. I have to do conversion, which means I'm trying to convert into common unit of measurement. Imagine $1 is 90 rupees. $1 is 90 rupees. So tell me, what is my total purchase value frame? $1 into 90 rupees. So how much it is? 90,000 in rupees plus Indian purchase 10,000. What is my total purchase now? 1 lakh rupees in INR. This is called as measuring in terms of money, which is common unit of denomination. Okay, not okay? Fantastic. Once you identify a business financial transaction or an event, then measure in terms of money. Now, officially, the accounting begins. So far, what you've done is oral step in the mind. Now, from third step onwards, your practical accounting begins. Now, the recording will happen through journal or subsidiary book. Now, this is not my subject matter of discussion. My only focus is on journal. Now, you have to pass a entry to record the transaction or an event in my books of accounts. What is the step involved? For that, the first step is identify the accounts involved in BFT. In the BFT or BFE, which you identified above, no? In that, identify which and all accounts are involved. For example, Ram contributed rupees 10,000 in cash towards capital. Ram contributed 10,000 rupees in cash towards capital. My first question to all of you, is this transaction or event? Ram contributed rupees 10,000 in cash towards capital. Transaction or event? It's a transaction because it involves exchange of money between two parties. One is business and other party is Ram. Other party is Ram. It's a transaction between business and Ram. It's a transaction. Okay. Second, is this transaction having any financial value? Yes, rupees 10,000. Is this happening in the course of business? Yes. So it's a business financial transaction. And what is the monetary measurement? INR only. It is INR only. So I have no problem. Third, now this I have to account it. So in this I have to identify which 2 accounts or 3 accounts are getting affected. Can you tell me in this transaction how many accounts are affected? 2 accounts. One is cash. Second is Ram's capital. Cash and Ram's capital. So from the transaction, you have to learn how to identify the accounts involved. Accounts involved. Okay, not okay. So 2 accounts involved is, one you said cash. Second is Ram's capital. Now, classify the nature of accounts as per either golden rule or modern rule. What are we going to follow? Modern rule. As per modern rule, cash is what classification? Very good. Asset classification. Ram's capital is what classification? Capital classification. Capital classification. Now tell me people, if I apply the rules of debit and credit, cash, should I debit or credit? Cash have to debit because asset is what balance? Asset is debit balance. To increase asset, debit. To increase asset, debit. So I have to give a credit, debit. Ram's capital is what balance? Credit balance. To increase capital, I have to give a credit. Now in 11th standard, what do you think what we did? Throughout the journal topic, I taught people why I should debit this and why I should credit it very aram se. Because in 11th, we had 1 year of time to learn the basics. So touch your heart and tell me, in 12th standard, will we have that much luxury of time to sit and do all the steps one by one? No, because portions are very huge. It's humongous portion, voluminous portions. Maybe here and there, for 1 class, 2 class, 3 classes, I can go like Amul baby. I can follow all of these steps. By doing that, if you're becoming a pro, lucky for you. But imagine, even by spending 2-3 classes like this, if you're not able to get a hold, if you're still trembling in your accounts, debit credit apni na, then what is the solution for it? You have to do your 11th properly, especially those 6 chapters. What I said, no, you have to do it properly. There's no other chance. There's no other chance. At least I'm there who's sitting and doing a recap of 11th here and there. Who does the recap? Otherwise, nobody does it. Because 12th ka portion itself is so huge to complete. We don't have time for all this. But still, I wanted to put a seed in your mind that 11th is going to be crucially important for your 12th standard. So by applying rules of debit credit, and by following double entry system of accounting, we will do the recording. And plus, to record this, it has to be supported by evidences. We need to have evidences to record the transaction. Come back to the first point. I said you to identify business financial transaction, no, or event. On what basis do you identify? On the basis of document and evidences only. For example, I purchase goods. So what will I get as a supporting evidence? Purchase bill. So using purchase bill, I will identify this is a purchase transaction. So for every transaction, there will be some evidence or the other. Especially when you encounter any transaction with the third party, definitely you will have a bill. If I'm buying AC, I'll have a purchase bill of AC. If I'm buying raw material, it will be purchase bill of raw material. If I'm selling, I'll have selling invoice. Can you please tell me, for sales return, is there any evidence or not? For sales return, is there any evidence or not? Sales return means what? My customer to whom I sold the goods, he gave the product back to me. Customer returned the goods to me. That is sales return. What is the document for that? What is the evidence for that? A debit note or credit note? Okay. Tell me one thing. What is the journal entry for credit sales? What is the journal entry for credit sales? I'll send you back to 11th. I'm telling you. Data to sales. Got it? Not got it? This is the journal entry for sales. When you do sales return, what is the entry for sales return? Sales return to data. Got it? Now, the supporting evidence for this is what? Sale bill or sale invoice. Sale bill or sale invoice. What is the supporting document for this? It's credit note, my dear. It's not debit note. Debtor, when you created, you gave a debit while doing a sale. But upon the sales return, the debtor is now credited. Credited means what? We are reducing the debtor. So we have to give him a note called as credit note, telling the debtor that, look, debtor, I have credited you in my books of accounts. You have to inform him. So for that, what note will you give? Credit note you will give. Got it? Not got it? This also be discussed in depth in the 11th standard. That's a different story. You guys forgotten. But this is very, very important. Anyways. So what I'm trying to say is that for every transaction that you take place with the third party, there'll be a supporting evidence. And without evidence, you cannot record any transaction. For you to record any transaction or event in the books of accounts, having evidences, documents is very, very important. Okay, not okay. Fantastic. So record the transaction on the basis of evidence. So here you decide which account to debit and which account to credit. But the problem of the journal is what, it does not help you. It does not facilitate you in totaling. For every transaction record, separate entry. At the end of the year, if I ask you what is the total purchase, you will not be in position to tell, because the format of the journal does not help you in totaling. Hence, for totaling purpose, we post all the transaction one more time to a place called as ledger. For example, let's say this is cash account. So Ram gave 10,000 as cash towards capital. What is the journal entry? Cash account debit to Ram's capital. I'll do it here. Cash account debit to Ram's capital. Let's say he's giving another 5,000 in form of check also. So what is the entry going to be? Bank account debit 5,000. Cash account debit 10,000 to Ram's capital 15,000. Okay, not okay? Now you tell me, people, in cash account, how do you do the posting? To Ram's capital, what amount? To Ram's capital, 10,000, 15,000. 10 or 15? 10. 10 or 15. To Ram's capital, they're telling. 10, they're telling. What do I tell? I don't know. 15, 10, 10. Kana, ninga? 10. My God. 10, 10, 10, 10, 10, 10, 10, 15, 10. Only 2-3 intelligent people are there. Rest all mudded only. 10, 10. ஏமா 2 ராம்ஸ் கேபிட்டல் சொல்றேன், திருப்பி 10 சொல்லிட்டு இருக்கீங்க. 10 or 15? Inky Pinky, when you don't know the answer, Inky Pinky Ponky, father had a donkey, Jindabad. Come on, tell me. Guess. சும்மா கண்ணா நீதாமா? 10, 10, 10, 10, 10, 15. Very good. Online people, how many of you say 10? Raise your hands. How many of you say 10? Raise your hands. In Zoom meeting, there's an option to raise your hands. Tanu, Subish, Kesav, 10. Dikshita, 10. Oh my God. All of you wasted my 11th standard. Okay. Migda, 10. Darshan, 10. Mokit, 10. Oh my God. I have to take all of you back to 11th standard. Chalo, great. Put your hands down. Put your hands down. Those who say 15, raise your hands. Zoom meeting. 15. Pavitra, 15. Chavi, 15. Gauri, 15. Jason, 15. Others, fast. Some people are playing double role. They're not raising hands for anything. Cheating this is. I'll come and haunt you in a dream, I'm telling you. Rohit, 15. Aditya, 15. Wonderful. Chat में भी आया? कहाँ chat कहाँ है? ये है क्या? Ridhanya says I'm using, okay, no camera. Next class you plan. Ridhanya, 10,000. Wonderful. All those who said 10,000, first I'll deal with them. All those who said 10,000, you guys are terribly right. Clap, no? I wantedly chose this question today. I know people will not surprising for 11 people because they know what is my pattern of asking question. How do I, surprise them? Anyways, now listen to very carefully. This is what I said in the beginning. It's very important to have a strong basics. Whenever we do posting in ledger, whichever account you're opening, against that account, what amount is there, that we record. So I'm opening cash account. This is cash account. In cash account, on the debit side, record 10,000. On the debit side, record 10,000. Now, so I have to record something in description. So what will I record in description? Whoever is the opposite partner of this 10,000. Debit opposite partner is credit. So who's there in credit? 2 Rams Capital. So we'll record 2 Rams Capital in credit as description. Got it, not got it. So likewise, if I open bank account, if I go to bank account, how will I do the posting? In the bank account, I'll go to debit side. Which side? Debit side. Debit side, I'll record this amount, 5,000. Always description should be given of the opposite party. Who's opposite party here? 2 Rams Capital. So 2 Rams Capital, 5,000 rupees. Got it, not got it. In Rams Capital, I should record in credit 15,000. But this is what type of journal entry? This is compound journal entry. How many of you have not heard this in your lifetime? This word compound journal entry you have not heard in your lifetime. 1, 2. In school they have not taught. Oh my God, how did you survive in 11th? Because in 11th standard, this was there. Compound journal entry was there so many places. Okay, today it's an information, no? Chalo. Whenever you have multiple debits and multiple credit, either in debit or credit, multiple accounts. Either in debit or credit, you have multiple accounts. This is called as compound journal entry. So this 15,000 is a compounded amount. What do we call this as? Compounded amount. Because this is having 2 amounts in it. One 5,000 of bank and 10,000 of cash. So whenever we have any compounded amount, we'll break down into that many parts which is there on opposite side. So on the opposite side, how many parts are there? 2 parts are there. I'm breaking down this 5,000 into 2 parts. Any problem? Now I'll pass the entry. How will I pass the entry? Now record this 5,000 in the credit side of Rams Capital. Go to Rams Capital, credit side, record 5,000. Now tell me who's the exact opposite partner of this 5,000? By bank. And now record this 10,000 in the credit side of Rams Capital. Credit side of Ram's capital record 10,000. Who's the opposite party of this 10,000? Exact opposite party. Buy cash. This was a solid training given by me in the 11th standard. Now the problem is your entire volume 1 and volume 2 is full of journal ledger only. Multiple compounded journal entry. So if you're not very clear with the posting update, you'll have a nightmare here, I'm telling you. So it's very, very important that you have a strong hold on the basics. Now, like that, if I keep on recording transaction, imagine there is another cash contributed 6,000 rupees by Ram towards capital. So what is the entry for that? Cash to capital. So now, to Ram's capital, how much it is? 6,000. So total capital contributed by Ram in cash is how much? 16,000. Imagine 2,000 rupees Ram is withdrawn from capital by cash. Is withdrawn capital from in form of cash. What is entry for withdrawal of capital? Let's do a direct entry. Let's not put drawings. Direct entry. Cash is going out. So to cash. Debit capital directly. Debit capital directly. This capital to cash. So in cash account, buy capital. Buy Ram's capital. How much? 2,000 rupees. Buy Ram's capital. 2,000 rupees. Any difficulty? Now tell me, what is the balance in the capital account? That is in the cash account. What is the balance in the cash account? 14,000 rupees. 14,000 rupees. How did you get this? Debit side, the total is highest. So total of the debit side, which is highest, I totaled it 14,000. And this becomes the total of the other side automatically. From 14,000, if I minus, sorry, 16,000. Okay, sorry. The total of debit side is how much? 16,000. Whichever side is having the greatest total, that total will come on the opposite side also. So from 16,000, if I minus this 2,000 rupees, from this 16,000, which is on debit, if I minus the credit 2,000, balance is how much? 14,000 rupees, which is in the cash account. Got it, not got it? Got it, not got it? Now, this ledger is helping me to do the total, which was missing in the journal. In the journal, I was not able to get to know what is the cash balance, bank balance, capital balance. I was not able to get it. To get the balance, for me, ledger is going to play a very important role. Got it, not got it? So this is called as buy balance carry down. Now what happens after this? On the opposite side, what do we record? To balance brought down. How much it is? 14,000. Please tell me, if there's a balance brought down coming on debit side, what does it mean? This ledger is having debit balance. Very good. This ledger is having debit balance. By chance, if buy balance brought down is coming on credit side, imagine if the balance brought down is coming on credit side, what does it mean? It is a credit balance item. Very good. Now, why this is important? Because all the ledger having debit balance means balance brought down on debit side will go to the debit column of the trial balance. And all the ledger having credit balance will go to the credit column of the trial balance. Got it, not got it? So once you prepare the ledger, the balances of the ledger will be transferred to a place called as trial balance. Why? To check arithmetical accuracy. Arithmetical accuracy, how do you check it? Once you transfer all the ledger balance in the trial balance, the total of the debit and the total of the credit should be same. If it is same, means you have followed the double entry system of accounting. If it is not matching up, Dina, somewhere double entry system is compromised. So we'll get one hint there. That is where we call it as arithmetical accuracy being checked. Got it, not got it? So accounting is a systematic process of identifying business financial transaction or an event, measuring in terms of money, recording through journal, classifying through ledger, summarizing through trial balance and P&L and balance sheet. So from the trial balance, I will identify all those accounts which has got flavor of, taste of, income, gain, expense, losses, and I will transfer them to trading and P&L account bypassing a closing entry. So many people will not be aware of what is closing entry. How many of you here are not aware of closing entry? What is the meaning of closing entry? All of you know what is closing entry? No. Then raise your hands properly. I don't know. Next. Closing entry. No. Closing entry. No. Closing entry. What is closing entry? Little bit, can you elaborate? In your understanding, just try to put forth. It's okay. What you said is correct. Final stage of recording correct சொன்னீங்க. But அது எதுக்கு பண்றோம் அப்போ? Hmm. Okay, I'll just elaborate what she's saying. So basically, all these accounts are there, no, which has got the flavor of income, gain, expense, and losses. We call them nominal account. All the nominal account ka ledger balances should be made zero by transferring their balances to trading and P&L account. Whereas all the other accounts are there, no, which has got the flavor of asset, liability, and capital. We will let that ledger have the balance in the ledger itself. So cash account irukku illaya, cash account the balance irukku 14,000 rupees. I want that balance to be in the ledger itself because that cash balance will get carry forwarded next year. But sale account, purchase account, all that account is there now, which is nominal in nature. I don't want them to carry forward next year. Why? Because if I allow the nominal accounts to carry forward next year, then it'll get mingled with the nominal accounts of next year. For example, current year sale balance 1 lakh. If I carry forward them to next year, this 1 lakh will get added to the sale of next year. Imagine the sale of next year is 50,000. So 1 lakh of previous year and 50,000 of next year, total sale becomes how much? 1,50,000. So in the next year's financial statement, your sale value will become how much? 1,50,000. And that year's sale is actually how much? 50,000. So we can never let the nominal account balances get carried forward to the next year. So we have to close the ledger, and for that we pass one entry called as a closing entry. Closing entry, and we have the closing entry in 12th syllabus also. In entire partnership at multiple places we'll pass closing entry. I'll give a glimpse of that when I do that particular concept. So in the trial balance, all the accounts or ledger which has got the flavor of income, gain, expense, and losses, we call them as nominal account. We have to close that ledger by transferring it to trading and P&L account by passing an entry called as a closing journal entry. Closing journal entry. Okay, not okay? Okay. Then we are left with remaining ledger balances in the trial balance, which has got the flavor of asset, liability, capital, and we will keep them as it is in the ledger balances and take it to the balance sheet. Take it to the balance sheet. P&L account is prepared to evaluate the financial performance of the business. If I want to know how the business is performing, for that I will check the profit and loss account. And balance sheet is prepared to measure the financial position on a particular date. How much cash I have, how much money is there in bank account, how much money I'm supposed to collect from debtor, how much money should I pay to the creditor, how much money should I pay to the owner in form of capital. So on a particular date, what and all I should get, what and all I should pay, what and all I own. If I want to know a complete list of that, that list will come from the balance sheet. I'll get to know the position of each asset, liability, and capital. Now this profit and loss account and balance sheet put together are called as FS. What is it? Financial statement. Financial statement. These two documents are there, no? Trading and P&L account and balance sheet put together is called as financial statement. With financial statement, is your job over? The answer is no. So now, what is accounting process? Accounting is a systematic process of identifying business financial transaction or an event, measuring in terms of money, recording through journal, classifying through ledger, summarizing through trial balance, profit and loss, and balance sheet, and then interpreting or analyzing the financial statement. We have to do analysis of the financial statement. As an owner of the business, I need to know how my business is performing. So the CAs of my business or the experts of my businesses will do financial analysis by using multiple tool called as accounting ratio. This is there in the 12th syllabus, 3rd volume. Then there's something called as cash flow statement analysis. This is also there in your 3rd volume of T.S. Grewal book. Then there's something called as comparative size statement, common size statement. This is also there in your 3rd volume of the T.S. Grewal. All this is there in your syllabus. In the 3rd volume, we will learn how to interpret and analyze the financial statements. And many more tools are there. But in your syllabus, they have restricted only to these items. Once this analysis is done, then you have to communicate the analysis to the users of financial statement. Who are the users of financial statement? Owner, employee, then creditor, banker, investor, etc., who are connected to your business in a big way. To them, we have to communicate all this information. With this only your accounting process ends. With this only your accounting process ends. Got it, not got it? Now we will be applying all of these steps, maybe in today's session and maybe 2 more sessions, to give you a light base of 11th standard. But once I complete these 2 classes, whenever we come across these kind of questions, we'll have to do things directly. So by that time, you have to become a pro. Okay. Now my question to all of you, simple basic question. What is the meaning of debit and credit? What is the meaning of debit and credit? Okay. Others, especially those who have not done 11th with me, I want to know from them. What do you think is debit and credit? அவன் உளறா plus minus ன்னு சொல்லிட்டு. What is the meaning of debit and credit? That I said. What did you learn in 11th school? You don't tell my answer. What did you learn in school? You tell me. Online people, you tell me people. What did you learn? What is the meaning of debit and credit? What is the meaning of debit and credit? Sir, debit what comes in, credit what goes out. Debit the receiver, credit the giver. Debit all expenses, losses, credit all income and gain. Generally, if I ask this question, no, this is what the answer I'll get. What you have told is not meaning. That is rule. Rule is different, meaning is different. What is meaning of debit and credit? In simple language, debit and credit is nothing but plus and minus. In simple layman language, the meaning of debit and credit is plus and minus. Sir, if the meaning of this was plus and minus, then we could have used plus and minus itself. No. Why did they tell us? Why did they tell us to use debit, credit, etc., etc.? Got it? Not correct only. No. If it is credit is plus and minus, debit is plus and minus. Directly we can use plus and minus. Why are we having debit, credit, and all? For that, I'll take one more minute to explain. Okay, before that, do you know who this gentleman is? Sir, look at D. Passively. Who is he? Father of accounting. Very good, very good. You didn't say grandfather of accounting. I'll very good friend. He's father of accounting. Okay. Debit is nothing but plus and minus. Debit refers to left side of the ledger. Okay, not okay. Credit also means plus and minus. It doesn't mean that debit is plus, credit is minus. No. Debit will act sometime as plus and sometime as minus. Credit will act sometime plus and sometime minus. Now, golden rule, I'm not going in depth. Let's go to modern rule. As per modern rule, people, all the accounts, you take any account, cash account, bank account, debtor account, any account, you will be able to classify them in 5 categories. One is asset category, second is liability category, third is capital category, fourth is revenue category, fifth is expense category. This is called as modern rule. Modern rule is also called as American approach, also called as accounting equation approach. This concept became famous in last 6-8 years, or let's say last 10 years at the max. You can tell people started applying this. Prior to this, even in the CA course, we were only following golden rule of accounting. Then people discovered that we are not able to apply golden rule for all the journal entries. For all the journal entries, golden rule is not applicable. Hence, they came out with the second rule called as modern rule, where we are now comfortably able to apply the debit and credit in every transaction and event. So this concept says that all the accounts that you record will be classified into 5 categories: asset, liability, capital, revenue, expenses. Asset ka balance, nature of balance is always debit balance. Asset ka nature of balance is always debit balance. And if asset is debit balance, liability is opposite of it. Asset ka opposite is liability. If asset is debit, then liability will be what balance? Credit balance. Similarly, what is your golden rule for nominal account? What is the golden rule for nominal account? Debit all expense and losses, credit all income and gain. So debit all expense and losses, credit all income and gain. So expenses will have debit balance, and gain and revenue or income will have always credit balance. This rule is derived from your golden rule only. It's not that some scientist came and developed this modern rule just like that. This modern rule is coming from where? It's coming as a part of your golden rule only. So now, what is the significance of this debit balance and credit balance? So please understand, I took the example of Ram contributing 10,000 as capital in form of cash. In that cash was what balance? Cash is asset. What is cash? Cash ka classification? Asset. Cash ka classification is asset. Asset is what balance? Debit balance. Now, any debit balance item, any item or asset coming with debit balance, to increase it, we have to give a debit. We have to give a debit. Sorry, what is your doubt? Now, admit kar diya, but still coming, joining only. Ask them to rejoin one more time. Cash is asset. Asset will always have debit balance. Now, the hero of this category is debit balance. To increase hero here, to increase the value of the hero, we have to give a further debit. To increase any asset account, to add any asset account, we have to give a debit. To decrease any asset account, we have to give a credit. So in my example, when Ram is contributing cash in the business, cash balance is increasing. To increase cash account, what should I do? Give a debit. Those who are applying this for the first time today, you will find this difficult. But those who have been with me in 11th standard, throughout the 11th, we've been applying this 1,000 times. So by now, this has gone into your blood, veins, capillaries, whatever you say. It's coming by default to you. It's coming by default to you. Those who are not habitual to this, please make this habitual, because in entire 12th standard, I'll be applying only this rule. Because golden rule at so many places we can't apply, and I'll prove it to you also. So please become a pro of modern rule. Similarly, RAM ka capital is what classification? Capital classification. Capital classification. RAM's capital is capital classification. Capital classification is what balance, people? What balance it is? It is credit balance. If I want to increase RAM's capital, I have to give a credit, and to decrease, I have to give a debit. To increase, I have to give a credit. So can I say in both the situations, the balances were increasing? Yes or no? Cash balance increase, RAM's balance increase. So increase does not mean only debit. Increase is add. Add doesn't mean only debit. Increase means add. Add means plus. Plus does not mean only debit. Sometimes debit will act as plus. Sometimes credit will act as plus. Hence, to avoid the confusion of plus and minus, what experts did is they wrapped up this plus and minus with a wrapper name called as debit and credit. The plus and minus symbol is there, no, plus and minus symbol. They've wrapped up with a wrapper name called as debit and credit. With this wrapper, they added one rule called as golden rule and modern rule. Just to apply the rule and the accounting system will automatically take care of what to add and what to minus. For example, if you come back to this ledger, you come back to this cash account that we prepared, 2 RAM's capital. What is the first amount? 10,000 rupees. Cash to RAM's capital. Cash to RAM's capital. Again, RAM contribute how much capital? 6,000 capital. So total how much did he contribute? 16,000. Now in that, how much he withdrew the money? 2,000. So by RAM's capital, 2,000 rupees. Now what is the balance left? 14,000. Anywhere in this process, while doing journal or ledger, consciously did you apply the mind that, okay, this I have to add or minus like that? Did you apply your mind? No. Without your knowledge, addition, subtraction already happened. So what did you do here, people? On debit side, you record all the debiting transactions. When you balance a ledger, what did you do? You added all the debit side. So 10,000 plus 6,000 is how much? 16,000 you added. If debit is plus, credit is minus. So from 16,000, if I minus 2,000, the balance is 14,000. So here debit is acting as plus, credit is acting as minus. What is debit and credit? Nothing but plus and minus. Do I need to remember what to add and minus? Not required. So this plus and minus is there. No, it got wrapped up with a wrapper name called as debit and credit. With that, we added a rule called as golden rule and modern rule, and the accounting processes, because of which automatically, subconsciously, not knowing, you will do add and minus. So far in 11th standard, you did add and minus only, but without your knowledge. It happened automatically. Same way, if you go to RAM's capital also, in RAM's capital, what will be the posting? Buy cash 10,000. Buy cash 16,000. So RAM gave 10,000 in form of cash, 6,000 in form of cash. And for in form of bank, how much did he give? Check. 5,000. So by bank, how much did he give? 5,000. Correct, no? Cash account debit, bank account debit to RAM's capital. So in RAM's capital, buy cash, buy bank. No problem. Now tell me, what is the total capital? Okay, in the 2,000 is withdrawn. 2,000 is withdrawn. So to cash, how much? 2,000. What is the balance? 19,000 rupees is the balance. So here 10,000 plus 6,000 plus 5,000 is how much? 21,000. So credit side is nothing but plus here. If credit is plus, debit is minus. From this 21,000, if I minus 2,000 cash, that is capital withdrawn, what is the balance left? 19,000. So here credit is acting as plus and debit is acting as minus. Whereas in cash account, debit was acting as plus and credit was acting as minus. It's a revision class, so I have to be a little bit fast. I can't go very slow like how I went for 11th standard. Correct? No. I'm just doing a recap of it. So what is debit and credit? It is nothing but plus and minus. Then why are we not telling plus and minus? Why? Because sometimes debit will act as plus and sometimes it will act as minus. So we'll get confused when to add and when to minus. So to avoid confusion, what did accounting experts do? They came out with a concept called as debit and credit. So with the debit and credit, they added the rule. And this format or this formula will take care of automatically what to add and what to minus. You don't have to sit and actually ascertain what to add and what to minus. You don't have to put a thought to it. Everything will happen in the due process. Got it, not got it? Online people, got it, not got it? Likewise, revenue is what balance? Credit balance. To increase credit, to add credit, what do I do? Give a credit. Therefore, to decrease a credit balance item, I have to give a debit. Got it, not got it? Credit and debit are opposite to each other. Likewise, expenses have debit balance. If I keep on doing expenses, expenses will increase. To increase expense, to record expenses, what do I do? Debit. To decrease expense, credit. Any big difficulty here? No problem? Comfortable? Okay. Now tell me people, all of you in 11th standard learned how to prepare the trading account. Can you please tell me what is the format of the trading account? Tell me what will all come in trading account. Okay, one by one. Debit side. This is debit side. What will come? 2 opening stock. Very good. Then can I write 2 net purchases? Net purchases means what? Purchase minus purchase return. Then what will come? 2 direct expenses. Very good. Then credit side by net sales. Then by closing stock. Very good. If you have the answer as profit, where do you record this as? Debit side as 2 gross profit. Fantastic. Imagine the net sales is 1 lakh, closing stock 20,000. So total is how much? 1,20,000. Let's say opening stock is 5,000, net purchases 55,000, and that expense is 10,000. Can you please tell me the gross profit? This all the three put together is how much? 50, 60, 70,000. So 70 minus 120 is how much? 50,000. Can I say this is what you've learned in 11th standard? Fantastic. I have a question to all of you, especially those people who have not done 11th with me. You people have to answer. Opening stock is there. No, here what is 5,000? Opening stock 5,000. What is the nature of this opening stock? Is it income, expense, gain, loss, asset, liability, capital? What is the nature of it? Only those people who didn't do 11th with me have to answer. Opening stock is asset. Okay. Any other answer? Online people, even you can answer. Those who have not done 11th with me. What is the nature of opening stock? As per modern rule, I have to classify all the accounts into 5 categories, no? Asset category, liability, capital, revenue, expenses. So opening stock is what category? Which is coming in trading account? Asset. Okay. Online people, what do you say? Asset. Others? Online people, asset. Fantastic. Now those who did 11th with me, you tell me what is the nature of opening stock coming on the debit side of trading account. When did I tell you opening stock is asset? Very good. Expense. When did I say opening stock coming in trading account is asset? Not one time. 10 times we discussed in the class that opening stock coming in trading account is not asset, not asset, not asset. Those who did not do 11th with me, if they give this answer, still it is manageable. Because nobody have taught them correctly, so they have answered asset wrongly, acceptable. I have taught you personally that opening stock coming in the trading account is not asset, not asset, not asset. Opening stock in the beginning of the financial year, which is there in your godown, shop, warehouse, that is asset. Anything that I own in the business is asset. This opening stock at the end of the year, it is sold. It's sold. It sells off apnina. This is nothing but your expenditure. This is your expenditure. So nature of this is expenditure. It is not asset. The opening stock which is there in a godown, that is your asset. The part which is sold, that is your expenditure. Okay. Next question. The closing stock that we record here, what is the nature of it? Income, expense, gain, loss, asset, liability, capital. What is the nature here? Closing stock. Closing stock and nature. Asset, liability, capital, expense, income, revenue. What is it? No, 11 people, those who did with me, they will not answer. New people should answer. What is the nature of closing stock? Sorry? Liability, wrong. Asset, wrong. The closing stock which comes to your balance sheet is asset. This is not asset. This is reversal of expenditure. Oh my God. Sir, can you please explain? No. Today's subject matter of discussion is not this. There's something else. This I've explained in depth, not one time, two time, 5 to 6 times in the 11th standard. Again, I'll discuss, not today. When the right time comes in the future, I'll discuss this point. So that time I'll give you clarity that why we call this closing stock as reversal of expenditure. Got it? Not got it? But please understand, closing stock that is coming in trading account is not asset, not asset, not asset. Got it? Not got it? And the closing stock, which is what is coming here, there is a reason behind it. That reason also I've discussed with the 11 people. You will not believe. I asked this question to my foundation student also. People don't answer that. I asked this to CA intermediate people also. People do not answer me that. My question to all of you. Why do we record closing stock on the credit side of trading account? Why do we record? People, you know what answer they give me? I'm talking about even those people who are doing CA intermediate. Sometimes even people who have completed intermediate, what answer they tell me, you know, sir, if I record closing stock here, next year this will come as opening stock. So next year if I have to get opening stock appadina, I have to record closing stock here. Appdinchuli answer kudupanga. Some people will tell me the answer that, sir, if I don't record the closing stock, profit will be wrong, sir. Then I ask them counter question. What is wrong in that profit? They don't know what to answer. I ask them only one thing. When you record closing stock here on the credit side, can I see your profit will increase? For example, if I make this 20,000 closing stock as 10,000, what is your gross profit now? It becomes 60,000, which means if I keep on increasing credit side means my profit will increase. Profit increases means tax will increase. The income tax that you pay also will increase. So I am your client. You are CA. All of you are CA. I am your client. I am asking, closing stock is that item which I purchased in the business, but I did not sell it. Closing stock is unsold product. Why the hell should I pay taxes for the unsold product? The product which I have not even sold, why the hell should I pay the tax for that? Because if I increase closing stock, if I record closing stock, my profit increases to that extent. So that incremental profit will have incremental tax. So the product which I have not sold, why should I book a profit for that and pay tax for it is my question. This also I've answered in my 11th standard classes, which a lot of people don't know in 12th, in CA Foundation and CA Intermediate also. And this is a basic fundamental question of 11th standard. Now, if you're expecting that I'm going to answer this, no. The discussion of this is already over in 11th standard. If time permits, somewhere in future, I'll do this topic discussion one more time. Is that okay with all of you? Okay. Now, direct expenses is of two types. Direct expenses means what? It's of two types. What is direct expenses? Expenses incurred in relation to purchase. Example, wages. Then not wages meant carriage inward. Carriage inward means these are those expenses without incurring which I cannot get my goods. If I cannot get my goods, I can't sell the goods. If I can't sell the goods, I can't make profit. Apana, direct expenses are those expenses without incurring which I cannot do my business. I can't start my business. Second, direct expenses means manufacturing expenses. Manufacturing expenses. Manufacturing expenses. Factory rent. Without factory rent, can I do production? No. Without production, can I sell the product? No. Without selling product, can I make profit? No. Wages. Without paying wages, will labor work? No. If labor does not work, production will not happen. If production does not happen, goods cannot be manufactured. If goods cannot be manufactured, I can't sell it. Which means direct expenses are those expenses. If I don't incur them in business, I cannot do my business. Which means only if I incur these expenses, I can generate income, or else I cannot generate income. Then there's something called as indirect expenses. Indirect expenses are those expenses which will be done in the business for administrative purpose, selling, distribution purpose, which is for my convenience. If I don't do indirect expenses, still I can do the business. For example, let's say I'm into business of buying and selling laptop. Now, can I sit at home and sell also laptop? Yes. But despite that, I have a shop. Why? Because if I have a shop, it looks, little professional place where I can do the business, and there are chances that I can get more business out of it. My customer will feel more comfortable to come in shop than coming to my house. So now for that shop, I'm paying rent. So rent is what expenditure? Indirect expenditure. Indirect expenditure. Without paying shop rent, can I not do business? Yes. Sitting at home, I can sell the product and do the business also. So indirect expenses are those expenses which is incurred by the business for their comfort, for the comfort of the customer. But that is not an expenditure. If I incur only, I'll do business. Without incurring indirect expenses also, I can do my business. Hence, all the indirect expenses will go where? In your P&L account. And direct expenses goes to your trading account. Got it? Not got it? Now, this profit is called as gross profit. Gross profit means what? The profit that I earned by selling the product. For selling the product, for buying and selling it, what profit I made is this 50,000 rupees. From this 50,000 rupees, I would have incurred further expenditure. I paid office rent, office electricity, salary, for the staff and all. So all that expenses will get captured in your profit and loss account. So therefore, this gross profit will be transferred now from trading account to another ledger called as profit and loss account. Profit and loss account. Bypassing what entry? Transfer entry. Very good. So we pass something called as transfer entry. This is P&L account. So by gross profit will come how much? 50,000 rupees. 50,000 rupees. In P&L account, what do I record? I record indirect income. Indirect income. Let's say indirect income is 30,000 rupees. Total is how much? 80,000 rupees. And on the debit side, what do I record? I record indirect expenses. Selling expense, distribution expense, administration expense, depreciation, losses, etc., etc. All this will come in your P&L account debit side. Imagine that is 40,000 rupees. So at the end, the final answer what I get is called as net profit. Net profit. How much is my net profit? 40,000 rupees is net profit. Can I make this 45,000? If I make this 45,000, what is my net profit? 35,000. My simple question to all of you, imagine this 45,000 is nothing but office rent. Okay? Office rent. Imagine this office rent is not 45,000. Imagine this office rent is 85,000 now. Imagine, for a sake. Imagine there's a office rent of 85,000 I have to pay. So my question to all of you, I only have a profit of 80,000. But how much rent should I pay? 85,000. So should I record here 80,000 rupees as rent, or should I record 85,000 rupees as rent? Think and respond. I only have 80,000 profit, my dear friends. Only 80 profit. Rent to pay is 85,000. Should I record 80,000 or 85,000? I will record full 85,000. Because if you say your landlord, I only have 80,000 profit to pay. 5,000 I will not pay. He will chuck you out of the premises. He'll say, get lost. If you're not paying rent, get lost, he will tell. So you can't tell them. Forget them. To your employees, can you go and tell, I don't have sufficient profit, so I'll give salary only to the extent of limited profit. Remaining salary I will not pay. Can you tell them? No. Hence, all the expenses that you record in the trading account, which is direct expenses, and all the expenses that you record in the P&L account, which is indirect expenses, we call them as charge against profit. What do we call them as? Charge against profit item. Charge against profit item. Can I say expenses increase profit or decrease profit? Shankesh, expenses will increase profit or decrease profit? It decreases profit. So expenses are charged against profit. So this will reduce my profit. Meaning, what is the meaning of this? Meaning is that when I say something as charge against profit item, means I have to record them in my books of accounts irrespective of whether I have profit or not. Even if I have already a loss existing, still have to record those expenses. So charge against profit item means those items which I have to record in the business, whether I have profit or loss. While recording these items, I will not see whether sufficient profit is available or not available. I will not look into it. Got it, not got it. So any item or any expenses which is recorded in the trading account or the P&L account is called as charge against profit item. So in 11th standard, all the expenses that we discussed was charge against profit item. Got it, not got it? So far clear? Now, these both document, trading P&L account put together plus balance sheet put together is called as financial statement. Financial statement. This is in case of sole proprietorship business only. So if you ask me, what is the financial statement of a sole proprietorship concern, I will say trading P&L account and balance sheet. But when you're preparing the financial statement for the partnership concern, your financial statement is slightly undergoing a change. For a partnership concern, you are supposed to prepare trading account plus P&L account plus a new account called as P&L appropriation account. P&L appropriation account, and then a separate document called as balance sheet. Now these both put together is called as financial statement. These both put together is called as financial statement for the partnership concern. Got it, not got it? So now in 12th standard, are we going to learn how to prepare trading account and P&L account? The answer is no, because in the partnership business, preparing trading account and the P&L account is the same technique what we learned in the 11th standard for the sole proprietorship concern. You will never get any question based on trading and P&L account. 99% no chances to get question from this segment. But CBSE board here means be ready for surprises. They should not ask, but you know what happened in 10 CBSE exam? Yes or no? So anything can happen. But so far, what you don't know what happened? 10 CBSE max paper exam, what happened? You don't know. Oh. And on Facebook, Instagram, badina low. That is 10th only, not 12th. 10th only. Set 3 paper, that was the problem. Yes or no? Set 3. Ama. அப்ப நல்ல கோச்சிங் சென்டர் போய் படிச்சிருக்காங்க அர்த்தம். Now coming back, that is not a subject matter of discussion. The fact of the matter is CBSE is like judge me and prove me wrong. I put one Instagram reel on your WhatsApp group also. Did you see that? In that, one of the one of the representative from CBSE, they said that CBSE is a conceptual, it's a board which tests you on the concept basis. So be ready, be prepared. We can ask you any question anyhow conceptually. Don't come and tell us that this is not that part of a syllabus, that is not that as part of syllabus. Whatever is there in part of a syllabus, we can go to any depth to ask the questions. That is what they said. You see the drill one more time, you'll get the understanding. So what I'm trying to say is that 99% no chances that they will ask you a question to prepare trading and P&L. In 12th standard, the entire focus is on how to prepare the P&L appropriation account. How to prepare P&L appropriation account. Now, listen. Correct? Which means when you prepare trading account, you get something called as gross profit or gross loss, which is transferred to P&L account. In the P&L account, what do you get? Net profit and net loss. So this you will transfer to a place called as P&L appropriation account. What account? P&L appropriation account. The meaning of this account is called as distribution account. What is it called as? Distribution account. Means what? In the P&L appropriation account, we will share the profit to partners. We'll share the profit to the partners. So this P&L appropriation account, in this account, we will capture only those transactions that is happening between partner and the firm. If there is any transaction happening between partner and the firm, and if that transaction is related to partner, they'll go to your P&L appropriation account. Whereas any transaction happening between firm and the third party, any transaction happening between the firm and the third party will either go to trading account or P&L account. I'm repeating this one more time. Very carefully listen to me. Any transaction happening between firm and the partner, in the capacity of the partner, will go to your P&L appropriation account. On the other hand, any transaction happening between the firm and the third party in the capacity of the third party will go to your trading and P&L account. Got it, not got it? Got it, not got it? Online people, got it, not got it? Should I write it down? Any transaction between firm versus partners in the capacity of partnership relation will be recorded in P&L appropriation account. Any transaction between firm and partner or versus partner in the capacity of a partnership relationship will be recorded in P&L appropriation account. Will be recorded in P&L appropriation. Appropriation. Shortly and sweetly read as APP. Appropriation account. Note it down. I'm coming. Next. Any transaction between firm versus TP. TP stands for third party in the or under the capacity, in the capacity of third party relationship. Third party relation will be recorded in trading or P&L account. Trading or P&L account. Any transaction between firm versus third party. And what is the relation between them? It's a third party relationship. And this will be recorded in trading and P&L account. Such expenses will be called as charge against profit. Charge against profit. CI stands for charge against profit. Such expenses which is coming in the trading and P&L account, such expenses coming in trading and P&L account will be called as charge against profit. Charge against profit item. Charge against profit item. CAPI. Charge against profit item. Which means if any expenses is captured in trading account and P&L account, we call it as charge against profit item. Whereas any of such expenses captured in the P&L appropriation account, such expenses in P&L appropriation account is called as item of appropriation. Item of appropriation. Such expenses in the P&L appropriation account is called as item of appropriation. Item of appropriation. Please make a note. I'll discuss this elaborately. In the capacity of third party relationship will be recorded in trading and P&L account. Will be recorded in trading and P&L account. If anybody wants me to repeat any point, please let me know. I'll repeat it. No problem. Charge against profit item. CAPI means charge against profit item. CAPI means charge against profit item. Now tell me one thing, people. Rent that I pay to the landlord is charge against profit item or appropriation item? It's a charge against profit item. Why? Because rent I have to pay whether I have sufficient profit or not. Rent I have to pay whether I have sufficient profit or not. But charge against profit item means I will record that expenses only when I have sufficient profits. Now listen to me very carefully. I'm going to next stage, guys. Next stage. This is 45,000, correct? 45,000. My net profit is 35,000. Am I right? Gross profit 50,000. In that income 30,000. Total profit 80,000. From that, if I minus 45,000 rent, balance net profit is 35,000. Am I right? Now, this net profit will be transferred to another account called as P&L appropriation account. So by net profit will come 35,000. I'm yet to discuss this ledger with you properly. I'm just putting the concept in your head. What is charge against profit and what is item of appropriation? Okay, wow. Now in P&L appropriation, what do you record? All the transaction happening between firm versus partner in the capacity of partnership relationship that will come in the P&L appropriation account. Sir, example, sir. the salary that I pay to the partner, the commission that I pay to the partner is called as item of appropriation. So here I'll record 2 salary or 2 commission. Sir, entry we don't know, sir. I have not even taught you the entry today. Today my objective is only to put into your mind what is the meaning of charge against profit item and item of appropriation. In the upcoming classes, we will take at least two classes for salary, commission, interest on capital, interest on drawing, capital account, etc. Today is just a trailer. So I'm just telling you that salary that you pay to the partner, commission that you pay to the partner, interest on capital that you pay to the partner, these are called as item of appropriation. Sir, what is the meaning or purpose of this item of appropriation? The meaning of this item of appropriation means I will pay salary only if I have sufficient profit. Imagine the salary that I have to pay is 40,000 rupees. But how much is the money available? Only 35. So the maximum salary that I can pay here is 35,000 rupees. Oh my God. But in case of P&L, it is not the case. If the profit is not sufficient, I still paid the entire amount. Correct? No, my profit was 80,000. Rent was how much? 85 I said. How much did I record expenses? Full 85. Because that rent is a charge against profit item. So when you record a charge against profit item, you will not see how much profit is there or not there. You will record the full expenses. But when you come to P&L appropriation account, and when you are about to record the expenses to be paid to the partner, you will record those amount subject to the availability of the profit. Why? Because the P&L appropriation ka another name is distribution account. What is it called as? Distribution account. Distribution means what? I will distribute what I have. In my hand, if I have 35,000 laddus, how much can I distribute? 35,000 only. Can I distribute 40,000 laddus? Not possible. So what is the difference between charge against profit item and item of appropriation? Charge against profit item means I will record them in the trading or P&L whether there is sufficient profit or not. Whereas item of appropriation I'll record in the P&L appropriation account to the extent of the available profit. If profit is not sufficient, I will not record that excess amount. Sir, if I have full loss, business is into loss, will I pay salary to the partner? The answer is no. The answer is no. That is called as item of appropriation. Got it, not got it? Now you'll have a lot of doubts regarding this. I know you should have. If you don't have the doubt, I will put doubt into your mind and solve it in the upcoming classes. Got it, not got it? Because today my intention was to discuss only the meaning of charge against profit and item of appropriation. You will be having a lot of doubts, which I'll clarify gradually in the upcoming classes. Got it, not got it? Now, can I come back and read your notes? Charge against profit and appropriation of profit. This is on your page number 1.8. 1.8. Charge against profit and appropriation of profit. Now, whatever we learned, no, we'll see theoretically it is matching or not matching. Charge against profit means that it is an expense. Did I say the same thing to you? Charge against profit means it is an expenditure for the firm and is paid. You have to pay that. You have to record that expenses whether the firm earns profit or incurs losses. Business profit whether it is profit or it is in loss. Whether your business is in profit or in loss, it doesn't matter. You have to record this expense means you have to record it. You have to pay this expense means you have to pay it. You will not look into whether you have sufficient profits or not. That is called as charge against profit items. So can you please tell me all the expenses which are in the nature of charge against profit will go where in the financial statement? Will go where in the financial statement? What did you say? P&L appropriation. उसको पकड़ के मार एक बार. मार तुम छोड़ूंगा नहीं इसको मैं. मार पकड़ मार पक्का. I'm ओ नो दे उसको दे वापस दे. हाथ में दे मैं देखता हूँ. प्रेम ना खा तू खा ले पैसे खा ले. बस very good donkey fellow. From last 45 minutes I'm screaming and telling charge against profit item will go to your trading and P&L account. Will not go to P&L appropriation account. It will go to your trading and P&L account. Got it, not got it? So all this will go to your trading and P&L account. Put an arrow mark and write it. It will go to trading and P&L account. Trading and P&L account. This is a transaction between firm and third party. And what is the relationship between them? What is the basis of relationship? It's a third party relationship. So basis is TPR. TPR means third party relationship. Got it? Not got it? Charge against profit means expenses that is accounted whether the firm earns profit or incurs losses. Net profit is determined after accounting for these expenses against profit. So how the hell did I calculate my net profit? How did I calculate my net profit? After recording the indirect expenses and direct expenses. And both of these are charged against profit item, which means only if you record all the charge against profit item, only then you get your net profits. So then when do I record item of appropriation items? That will come after your net profit is calculated. From the net profit, you will distribute interest on capital, salary, commission to all the partners. So this profit is distributed in multiple ways. This 35,000 I'll distribute in form of salary, commission, interest on capital and share of profit. Hence, this is called as distribution account, called as P&L appropriation account. Appropriation means what? Appropriation means distribution. Appropriation means distribution. Got it? Not got it? Got it? Not got it? Now, this part you keep it pending. I have not discussed with you. Appropriation means what? Appropriation of profit means distribution of net profit. Yes or no? This 35,000 net profit what I got, I transfer to P&L appropriation account. And once I transfer to P&L appropriation account, what am I doing with this 35,000? I am distributing this. To whom am I distributing? Only to partners. Only to partners, not to anybody else. Only to partners. So what do I capture in the P&L appropriation account? Sorry, P&L appropriation account. So all the item of appropriation goes to your P&L appropriation account. In this, what do I capture? The transaction that takes place between firm versus partner. That is captured in your P&L appropriation account. And what is the basis for this? It's a partnership relationship. So what is the basis? It's a partnership ka relationship. Okay, not okay. So appropriation of profit means distribution of net profit and interest on drawing among the partners as what? Salary, remuneration, interest on capital, profit sharing ratio, etc. As per the partnership deed. As per the partnership deed, you will give salary. As per the partnership deed, you will give the interest on capital. As per the partnership deed, you will give the profit sharing. That is called as appropriation of profit. So appropriation of profit means distribution of the net profit between or among partners on the basis of partnership deed or partnership agreement. Okay, not okay?
They told the profit also or loss also.
Okay, now the question what is asking, I didn't want to tell this now. I would have told this in future, but since he's asked it, I want to tell it. Sir, what if the partnership deed says that this salary should be paid, whether there is profit or loss, apdina, in that case, the partner salary is no longer item of appropriation. Then it becomes a charge against profit item. So you will take it to P&L account. You will take it to P&L account. Got it, not got it? Again, I'll discuss this point elaborately when I do the interest on capital, salary, etc., etc. Since he asked it, I told it now. But this was not the right time to discuss. But since you asked, I said, okay, not okay, okay. Now listen to me very carefully. Listen to me very carefully. Now, there are certain transactions that is happening between the firm and the partner, which will go to P&L appropriation account as item of appropriation. And two items will go to your P&L account as charge against profit item. So listen to me very carefully. I'm talking about expenses, which will go to P&L as charge against profit item. Which expenses? That expenses which is happening between the firm versus partner. Only two items. Only two items. First is interest on loan by partner. Second is rent to partner. Rent to partner. Okay, not okay? These two items is a transaction between firm and the partner. What did I tell you earlier? Any transaction happening between the firm and the partner will go where? To the P&L appropriation account. But these two transactions alone will go to your P&L account. P&L account. Because here the basis is not partnership ka relation. Here the basis is third party relation. Now you'll understand why I'm telling this in some time. Now, when this two transaction is recorded, no, the relation between the firm and the partner is not that of agency and principal. Here the relationship is third party relationship. So if any transaction the firm is encountering with the partner where it is third party relationship, then we will treat that expenses as charge against profit item, which will go to your P&L account. Except these two, every other transaction, whether you take interest on capital, whether you take salary, whether you take commission, this is a transaction between the firm and the partner. This will go to your P&L appropriation only. Why? Because the basis of relationship is partner. The basis is partnership relationship. That is, they have principal and agent relationship. Got it? Not got it? I'm 100% sure. Still, you have discomfort and doubt in mind. You have to give me some more time to give a clarity. Today, I'm only explaining few parts here and there. Got it? Not got it? Now listen to me very carefully. Now I'm going to explain why some transaction is going to your P&L and some is going to your appropriation. Are you all ready? This is very, very important. This is not understood, you're screwed. Because all the upcoming sessions, this will be again and again touched upon. So focus and listen to me. Partner. Partner gave rupees 10 lakh as capital. To whom? Firm. Correct? After few months or few years, again this partner gave rupees 5 lakh to firm, but not as capital. This time he says that this is loan. This is loan by partner. So my question to you, in both the scenarios, it's the same person. Let's say it is Mr. X. Same person, Mr. X. One time he gave this money as capital. Second time is not giving as capital. He says that no, take this as loan. Why so? Now that you have understood the concept of charge against profit and item of appropriation, now you should be able to answer. I asked this question in last class also. That why the partner is giving sometimes the money in form of capital and sometimes in form of loan.
Yeah.
I gave you a hint already. Yes. Very good.
Even as capital, then he will receive money.
Very good. Super. Bang on. He's answered it. Tell me, people, in the first case, partner is given 10 lakh capital to the firm. Whose money who's enjoying? Partner's money firm is enjoying. Can firm enjoy this money free of cost? No. So firm has to compensate this by paying interest. So here, firm will pay interest called as interest on capital. Any problem? Interest on capital is what item, people? Is it a charge against profit item or is it item of appropriation? It is item of appropriation. Item of appropriation will go where? In the P&L or P&L appropriation? This will go to P&L appropriation. In the P&L appropriation, I'll record this only to the extent of available profit. If profit is not available, will I pay interest on capital? Or rather I say, if profit is not there, only loss is there, net loss is there, can I pay interest on capital to the partner? The answer is no. So now, imagine this transaction took place in 22-23. The firm was into loss. So Mr. X was that student who did not study accounts from Prathik sir. So he did not know that if the firm is into loss, he will not get interest on capital. He was shocked in the year 2020-23 when he learned from his other partners that a loss-making firm cannot pay interest on capital to the partner. So he became very cautious next time. So next time in the financial year 24-25, when the firm was asking paisa, he said, get lost, I'll not give capital. You guys are cheating. When the profit is not sufficient, you give me less interest on capital. When it is in loss, you don't even give me interest on capital. Cheating fellow you guys are. Now this money what I'm giving, no. I'm not giving in the capacity of a partner. Now I'll give this money in capacity of a third party. Like a third party, I'll give this money called as loan. Now the moment he's giving this 5 lakh in the capacity of third party, what is the underlying relationship? Is it partnership relationship or third party relationship? Third party relationship. Now since this is a third party relationship, can firm say, get lost, I will not pay you interest? No. When the firm is entering any relationship with a third party, as third party relationship, you have to pay them the expenses, whether the firm is earning profit or losses. So here X became very vigilant. Oh ho ho! If I give the money as partner relationship, these people take the advantage of me becoming partner. Already firm is there into loss. Where will you take money and go? Leave it. They take advantage. Your money only no. Your firm only no. Your business only no. Why do you need interest on capital? Like that, they will corner me and they'll not pay me interest. So now this time, Mr. X become very cautious. Now when I give the money of 5 lakh rupees, I'm not giving in the capacity of a partner. I'm giving in the capacity of a third party. So now I'm telling, I means Mr. X is telling firm, don't treat me as your partner for this transaction. Treat me as a third party. Means give me interest even when there is a loss. So interest on loan by partner. So firm has to pay interest to the partner. It is the expenditure. But this expenditure will go where? In the P&L account. So what is this? It's a charge against profit item. Hence, to come back here, what is charge against profit item? It is an expense. It is an expenditure. Hence, it is transferred to debit side of P&L account. Where do you transfer charge against profit item? In the P&L account. That's what I said here. Expenses goes where? In the P&L, and that is called as charge against profit item. And this expenses will help you to calculate your net profit and net losses properly. Whether profit is earned or loss is incurred, this expenditure, which is in the nature of charge against profit, you have to record it as charge against profit item. So charge against profit item, expenses are recorded whether the business is earning profit or incurring loss. Where do we transfer them? We transfer them to debit side of P&L account. Okay, not okay. And this expenses is recorded before we prepare the P&L appropriation account, because first we prepare trading and P&L account, then only appropriation. So charge against profit item goes where? In the trading and P&L, which is coming before appropriation. Example, interest on loan by partner. Interest on loan by partner is a charge against profit item, because you have to pay them interest whether the business is there into profit or loss. Why? Because now the relationship is of firm and third party. You have to pay them. Got it? Not got it? Another example is rent paid to partner. What happens here is, no, when let's say I'm one of the partner. This premises is my premises. I'm giving this premises on rent to the firm. Correct? So now when I give this as premises as rent to my firm will take advantage. When they'll take advantage, when business is there in loss, no, they'll come and emotionally blackmail me. See, this is your business only, no. Our business is not doing well, no. It is into loss, no. Why do you want to take rent? So don't take rent. Like that, they will brainwash me. So now what I do is, very carefully, I'll tell them, I will give this premises only to you if you treat me as third party. If firm wants the premises from me on rent apnina, I will give the premises to them on rent, but I will not give as a partner. In the capacity of the partner, I will not give. I'll give in the capacity of third party. So when I give something in the capacity of the third party, the firm has to pay me rent, whether there is profit or loss. So rent paid to partner is always treated as charge against profit item, because the transaction that is taking place between the firm and the partner is not partnership basis. It is third party relationship. So to a third party, can you say, I don't have sufficient profit, I will not pay you? Can you say a third party like that? No. Now, since here the partner is giving the premises to the firm on the rent, the partner is acting as what capacity? Partner capacity or third party capacity? Third party capacity. So can firm deny the rent now? No. Firm has to pay the rent whether there is profit or loss. Hence, these two items alone, people, only these two items alone will go to your P&L account as charge against profit item, because these two transactions the partner is doing with the firm in the capacity of the third party. இந்த ரெண்டு transaction மாத்திரம் வந்து பாத்தீங்கன்னா ஒரு partner வந்து firm ஓட interact பண்ணும்போது they interact in the capacity of the third party. Here the relationship is not that of firm and the partner, whereas all the other transactions such as salary, interest on capital, commission, transfer of profit, these are called as item of appropriation. The basis of the relationship is partnership relationship. Here we blackmail the partner, telling that partner, why do you need salary? Why do you need interest on capital? It's your business only, no. We don't have sufficient profit, no. We are into loss, no. So why do you need it? I will not give in. You take advantage of it. Got it? Not got it? So all these are called as item of appropriation. What is meaning of appropriation of profit? It means distribution of the net profit. Appropriation means distribution. What is the meaning of distribution? To give what you have. I have 40,000 profit only. Can I give 45,000 salary? Not possible. So how much salary maximum can I give? 40,000. It means distribution of net profit for the year among the partners as per what? Partnership deed. We all know that. Appropriation of profit is distribution of net profit as agreed between the partners. So this profit is there now, is distributed to the partners in form of salary, commission, remuneration, interest on capital, share of profit. In different forms, this profit is distributed. Where do you record this? Since this is also expenditure, the salary that I pay to the partner is also expenditure. We transfer to debit side of P&L account. Debit all expense and losses. So in the P&L appropriation account, on the debit side we record. In the P&L appropriation account, on the debit side we record salary, commission, interest on capital, because all these three are expense in nature. It is appropriated after accounting all charges. Means what? Charges here means charge against profit item. So after you record all the direct expenses, indirect expenses, then you get the net profit. No, from that net profit only I'll distribute the profit to the partners. Example of that is salary to partner, interest on capital, transfer of profit, general reserve, etc. So today what I discussed is only trailer. We have separate session on rent. We have separate concept called as rent. If you look into this, next class, I'll discuss with you what is the meaning of loan by partner and interest on loan by partner. Then we have a separate session and questions for loan to partner. Separate questions on loan to partner. Then we have separate session on what is rent payable or paid to the partner. Separate session for interest on capital. Separate session for interest on drawing. Separate session how to prepare the P&L appropriation account and distribute the profit. It's a very lengthy chapter. So today what I discussed, this session, the objective of this session is to put into your mind two components. What is the meaning of charge against profit? And second, what is the meaning of items of appropriation? This rendu mattum discuss pandra, I took so much of time. Shh, listen, I'm not done. Where are you going? Wait. So in the beginning of the session, what did we learn? We learned accounting process. I did a quick recap of 11th standard. And that concept I connected to your trading P&L and P&L appropriation account. Because trading P&L and P&L appropriation account is a part of your accounting process. Accounting is a systematic process of identifying business, financial transaction or event, measuring in terms of money, recording through journal, classifying through ledger, summarizing through trial balance, trading P&L appropriation and balance sheet. Directly had I taken and told you P&L appropriation account, nothing would have gone to your head. So I came as a structure from the beginning so that one flow will get maintained. So I did journal, ledger, trial balance, then I came to trading account, P&L account, then P&L appropriation account. So flow I maintained. Got it, not got it? For that effort, clap for me, no? Properly. Full heart. Very good. Or else, in 10 minutes, I have to explain to you what is charge against profit and item of appropriation. This is all charge against profit. This is all item of appropriation. I have given a list and made you by heart. But I didn't do that way. I have my way of approaching a particular concept in such a way that if I spend this 2 hours with you, this 2 hours should give you that much knowledge. Tomorrow, whenever you come and revise, instantly all the memory should flash. Purida. So only for discussing these two items, we took one entire class. From next class onwards, full-fledged practical questions will enter into. And my humble request is, when you come for the next class, please go through modern rule properly and come. In your 11th standard textbook, whether you have T.S. Dewal or D.K. Goyal or any book, please do journal entries based on modern rule. Please do little bit of ledger practice also. And go through glance final accounts and adjustment of final accounts, little bit and come. Because in the next class, we are going to discuss all of them. For example, you see, we'll discuss what is the entry for loan given by the partner. Then what is the due entry for interest. Then we'll discuss what is the closing entry. Then we'll discuss what is the payment entry. This is all connected to your 11th standard. If that is not clear, this will become a problem for you. So please do a light recap of this and come so that in the next class we can smoothly sail all these questions. Got it? Not got it? Clear? Comfortable? When are we meeting next? Friday. Friday we're meeting? Okay. Chalo people. Let's wrap up. That's all from my side for this session. I'll see you all in the next class, which is Friday, 6:45 p.m. sharp. Until then, bye-bye. See you. Take care. Thank you. Thank you. Thank you.